Sounds really interesting. Tell me more.
Well, the world economy had a bloodbath not very far back, triggered by excessive greed of the market participants, which eventually got converted into strong sentiments of fear. Subsequently, the government had to make a massive attempt for recovery, which still has not got the economy fully back on track. The business started in a benign manner initially, triggered by populist incentives of the capitalist government for development of all, lax financial regulations, innovative financial sector, and rising confidence among market participants. The decisions of the different entity groups, the home seekers, mortgage originators, credit rating agencies, investment bankers, insurance providers, etc., was based on self-interest fulfillment, that is, rationality. Over time, however, the policymakers succumbed to the illusion of stability. Financial innovation was more focused towards making speculation easier. Confidence of market participants got converted into new era thinking, typified by overconfidence and disaster myopia. As a result of which, greed became all-pervasive and the sentiments became contaminated by madness to cash in on the ballooning crisis. That was a time when the bubble burst and led to fear psychology. This then forced a massive attempt at resuscitation of the economy by the country's central banker under the guidance of the capitalist government. A typical boom-bust trap which we have been getting into since ages.
Well, seems like loads of drama, action, adventure, suspense, thrill in this discussion. Please give me some background into this mortgage business.
Mortgage business is around helping citizens buy houses through loans. Banks historically have been giving housing loan to borrowers keen on buying a house after screening the borrower. The borrowers buy houses from the loan and place ownership papers of the bought house with the bank or the lender. Till the time borrowers pay back their loans with interest, the ownership rights of the property resided with the bank or lender. This process is called mortgage and is an integral part of the financial system from centuries. Once the borrower closes all payments, the ownership is transferred back to the owner. Historically, the screening guidelines for prospective house owners were stiff, and the terms of the loans included a substantial down payment and relatively higher interest rate. Banks did a lot of due diligence in assessing the homeowner beforehand because they wanted to avoid default probabilities as far as possible. As a result, it was a labor-intensive business based on direct, long-term relationship between the borrower and lender. Also, the regulators forced the loans portfolio to be reflected in the books of account of the bank. So, the bankers had to give loads of explanation to the regulators if defaults happened. In a nutshell, we can say there was enough incentive for the banks to be careful in giving out loans. This has continued since ages. In olden times, there was also a very small basket of subprime mortgage loans, which essentially depicted the loans given to borrowers whose creditworthiness was not as strong as the prime owners. The market for subprime loan originated sometime around 1980 with the passage of Depository Institutions Deregulation and Monetary Control Act, which allowed banks to charge rates that the banks found appropriate for specific class of borrowers. In 1982, the government further loosened restrictions on lenders, allowing them to charge variable interest rates and demand balloon interest rates when loans matured. Broadly speaking, 1980 to 1990 saw initial growth of subprime loan industry. The system was working very fine for both prime and subprime loan industry, as the number of links in the chain were low, just the borrower and the lender in a majority of the cases, and the rates were dependent on the risk profile of the borrowers, prime or subprime. Major changes started happening in the early 1990s when the financial alchemy house came up and popularized a major financial innovation called mortgage-backed security.
Wow, sounds interesting. Please tell in detail about this innovation.